Hey, good afternoon, everybody. How's everybody doing? Kanal here. Let's take a look here. So, market's down about 2% for the week. S&P down 1.84%. So, what we had seen here was, remember last week we were really watching to see if this bounce would hold, right? How's it going to act when it gets into right levels of resistance and supply? And so, we had a bounce right up to the 50-day moving average and basically just flushed right down. And so, essentially this bear flag, right, was taken out, and we've seen that in the past. If you look at the past flushes, right, we would flush down and then have a little bit of a bounce before a secondary move lower, and it's happened every time. As soon as you thrust down, you kind of a bear flag before the next move, and so that's kind of where we're at right now. You know, we're holding these lows here, and that's good. But that's if we break below last week's lows, right, then we have kind of a straight shot to the 200-day moving average. That's really far away, as you can see. But it would be a logical point to kind of look at this S&P 1600 area as a possible reload zone. And so, you know what, we might bounce here. We might bounce from these levels as we've been holding, and we are starting to get a little bit oversold. But as we've seen, these just kind of up moves in the markets have been getting sold off. And so what you have to look at it is, right now the market is guilty till proven innocent, right? And that's how we trade when we get under our major moving averages, because these are all supply zones, right, where there'll be a supply of shares coming into the market. And so till you thrust back over that, you have to treat everything, as guilty till proven innocent right now. So what we're essentially doing is, right, we've got lower highs on every single bounce. And so, right, if we bounce next week, say we come into the 650, 1660 area, it's still not a higher high, right? You're not negating the series of lower highs and lower lows. And so we really need to thrust back above here and start clearing out some of these levels before you can say that, hey, the market has healed itself and we're kind of back in terms of the run that we've been at. So watch last week's lows. If we crack below them, I would expect more downside, and it'll probably come fairly swift, as we've seen that a lot of selling has been coming in really quickly on these bounces, and especially when we've been breaking levels of support, we've really got some key flushes. So keep an eyeball on that stuff. Know your support levels, and we'll be good to go. In the chance that we bounce, our first level that we're going to watch is probably the 1650 and then the 50-day moving average. USO, so this is the oil ETF. You can see here we're still in a really strong uptrend for the most part. All its major moving averages pointing higher. We've essentially got a breakout pullback moving. So it does look like oil will probably take a bounce in this coming week off this support level. Gold chilling for the week. We had a couple up days, 3 down days. We've seen that, we're starting to see a little bit of a bottoming type of move in gold. Doesn't mean that the big run, is it going to go on a big run like we've seen in the past? Probably not, but with as oversold as it's been, it's just such a tank from the 180 level down to nearly 100. It's very logical to just kind of get a 15, 20 point bounce here. So we'll see, right? We're starting to dip here. Does this dip hold? If that's true, then we can expect this mini uptrend in gold to continue, maybe till we get to the 200-day moving average. Nasdaq, out of all the indices, this one has been holding up holding up the best. You can see here, right? We're still above our breakout spot, and we're still above our 50-day moving average here on the Qs, and so that's good. That'll be one of the indices that we'll watch to lead the way if we start to see the market make a turn. Now, if we do flush this 50-day moving average, right, we've got some gaps here. So I'd expect if we break under this 50-day moving average, this gap should fill, and so that would take us down to kind of the 3,500 zone on the Nasdaq. Well, I guess 3,525. So that's our downside target if this level doesn't hold. If we do start to bounce, you can see we've really been in a range for this last month, and so we'd really need to take out this range and this 20-day moving average to kind of thrust back over here to the highs. And so we've got some clearly defined levels on the NASDAQ. Russell 2000, this one is looking like, the one that could flush really the hardest here, as, we've just got a test, a triple tap on this support level. And so if we get back down to this, our first level of support is going to come down here to the Russell 1000. And then obviously if that doesn't hold, we got to kind of look at this 975 zone, and that'll be our next bounce point. So keep an eye on those bad boys. Home builders, nothing happening here. This is, very bearish. It almost is a topping pattern here. We've got a series of lower highs, and we're about to kind of break down from some support levels. We can see we're having a mini bear flag here, and we kind of take out this 28 zone, right? Where do we fall? We could fall to 27 very quickly. That was a previous breakout level. If not even lower. So, probably this is an indice that we want to stay away from, especially after such a big multi-year uptrend from 2011. It's had its run here, and now we essentially are just going to have to flush it and heal. Silver down 2.3%. So we had a nice move out of this flag pattern, so we're coming back and retesting this area. So we've got a few layers of support here in silver that could be potential bounce points. At this point, we don't really have any catalyst to buy, as we were so extended. It's very natural to come back here and kind of test some of these levels. So we'll see what happens once this settles. We're definitely not in a buy zone yet, and it's already gone on a pretty significant run for the most part. China just chopping around here, right? We took out a major resistance level, ran up to 200-day moving average, and we're coming back and testing that breakout spot. So if this level holds, we could see a bounce back to this 37 on the FXI. But right now we're kind of just in a chop zone, and so this is probably something that we'll leave alone for now. And so that's it for now, guys. The market has been shady, but it is earnings season, so there are plays pretty much every day. So one of the things that you really want to do is really stick to the stocks that are in nice trends, that are moving, that have catalysts behind them, as that will bring in the order flow and fresh buyers that you need, as those short-term corrections will get bought up. And so that's what we've been sticking to in the last week, is really a lot of those earnings plays and the movers that have great technical charts that have had some type of catalyst, as those will tend to buck the market even if the market starts to flush. And otherwise, we'll still have our bread and butter, and we can always load up some shorts. So that's it for now. I will come back with a watch list in an hour or two, and I'll talk to you guys later.